Today we're going to take a look at the
What's up, guys? Hi, Mark. Jesus. You were just waiting for that, weren't you? I hoped you pooped well. I didn't poop. Should I have pooped? How's positioning looking? I wrote it above. Kind of boxed in between, I guess technically like 6,000 and 6050. 6055 is a cent short on the 0 DTE. There's some bot puts down at 6030 still. A few bot calls now at 45, 40, 35. Not very many. You're an imperialist? I don't think so. I have 3 computers with their own keyboards on my desk. You're on one at all times. I just like to watch you guys. See, I can do room quotes too. That movie's really underappreciated. Yeah, I get it. Thanks for reminding me. How many of you guys have seen The Room with Tommy Wiseau? So J-Pod cuts into rising inflation. Are we mooning? Um, Not necessarily. I wouldn't do that to myself. No, until you realize how bad a movie can be, you can't say other movies are bad. I haven't seen Mac and Me. Although I did have a girlfriend to watch a movie about that dead dog all the Marley and Me. Fucking just all the time. Anyway, the test came back, and I definitely have cancer. Oh shit. Where? Wait, did you guys look at the stream card? I had to fix it. It loaded the wrong one. The new stream card is phenomenal. Exit the stream and come back. Yeah, the Santa one. So I know my wife really does have cancer, though. Oh, fuck. That's terrible. Who's Santa? J-Pow. It is, yeah. What was that guy talking about mooning? I thought you were bearish on the end of the week. I don't know. He's just saying shit. People have their own opinions, Dr. Drake. Who am I to stand between them and their dreams? But I don't want a red Christmas. Too bad. Where's gamma neutral now? It's a little higher. It's like wait, no, it's like 59 now, isn't it? Did I not update that? $59.30. Yeah, SPX is 59.99, but I meant yeah, SPXW. That Nvidia hedge though, wow. Yeah, because Nvidia does crazy shit. Hold on one second. Thanks, NW. Yeah, did Nvidia have some like news or something? Or just Nvidia? It dropped its micro AI chip? What the fuck is that? They must have gotten tired of pumping AVGO. That sounds more likely. Microsoft announced orders from Nvidia. Oh, okay. Yeah, I'll do it. Those were somehow not accounted for in its 52x forward earnings? Seems unlikely. Oh, they launched a Jetson computer for AI for $249. Oh, okay. And then Micron's high bandwidth memory chips for NVIDIA's AI processors are sold out until 2025. Hmm. That's okay. It's just a Raspberry Pi that connects to Chat GPT. Of course it is. What else would it be? Agentic? Wait, was that announced during market hours? Ooh, it was. Hmm. See, the problem is Nvidia doesn't really get bullish until it gets back above 38. Well, it's still got a little ways to go. I think it gets rejected here still. Do you think of an IWM straddle? Could be okay. I don't hate it or anything. Do you have any of the OPEX puts left on SPX? No, I don't. I have puts, but not for OPEX anymore. Are we pumping into FOMC? We'll see if we can get over gamma neutral or not. But that's been the goal since last night. I can't believe we opened under the collar. This morning's data was really bad. Do men really need a skincare routine? Yeah. As a matter of fact. Yep, we broke. Well, I put gamma neutral right there. We broke out. We got a little space above the synthetic short here. We'll probably fall back into it. But the synth short's at 55. One second. Do I want to short this? Kind of do. Our option prices today. Fuck that. Never mind. Isn't the synth short supportive when we're above it? It's not that supportive. There's gamma's still negative here across the entirety of the chain. I'm not going to. The options are overpriced. It's not worth the risk. Just two chains, AJ. I'm all right. That's it. You're done for the day. Fucking autistic asshole. I just can't. How's the day going? Pretty good. I got rid of AJ already. The fact that he's asking me any questions about options at all tells me that he's probably purchased some. And that makes me think he's done something stupid, and I don't want to listen to it the rest of the day. He could change his name, but he could never hide his personality. Mm. Nvidia was down 1.22% today. So you were up on your calls? Hmm. Does it bother you that you have such a well-attuned AJ detector? Yes. So much. Don't ask earnest questions about things you should have learned 3 years ago, quite like AJ. Yeah, it's a bit annoying. Death taxes, SPX. Hmm. What do I want for Christmas this year? I don't know. Am I just supposed to manifest things, or do I have to go buy it myself? I'm probably gonna fly out to California for a few days. Excuse me? The Vana pressure? Fuck you talking about? Neither of those things cause pressure. You can usually get shorter dated puts if you're trying to like hedge off near term risk. It's like the same person. I think we're in a massive bubble. Yeah? You might be right. Although I don't think today's price action has anything to do with it. It's Buble. Tesla 200 Jan 2026 puts like kind of fun. It could be. Hmm. I'm not even sure it would take that long. Is Elon gonna sell the top again? I thought his pay package got denied. I got made fun of by my coworkers yesterday because I was wearing suit brands from Macy's. Haha. Yeah, I could buy custom suits, but like 3 suits on the low end would be like 3K. Fuck that, man. I mean, if there's one, I feel like if there's one thing that you should spend money on, it's suits. Notson, welcome to Dillionaire. Thank you so much, dude. Hit me up on the Discord. I'll get you added back to the country club. High quality suits just make you feel better and look better. And look better than other people in low quality suits, which is really what matters. A cheap Batman suit just makes you look ridiculous. How low can CGC go? I have no idea. Canopy? 0? Oh, thank you so much, man. Welcome to Cornichon, guys. Give Notson a shout out for hooking you up. Remember the banking system almost collapsed and the market just went straight up? I do. I was there. Thanks for the carry, Greg. Happy holidays. No problem, dude. Happy holidays, man. Have you ever made tamales? Not myself, but I've bought excellent tamales from other people. They had the
Someone put their
requisite
pickle in
skill
my
set.
jar. What narrative would be needed to maintain positive price action to the upside if we rip from FOMC today? Can JPO say anything that would spook enough to trigger a local breakdown? 3.
Bulls are just trying to secure the safety of their upside positioning into the FOMC meeting, which I said they would do last night. They just failed this morning because the data was super bad. I mean, if Powell cuts and things go as expected, it shouldn't really shake things up too much. I don't think it makes anything more bullish. But we'll be past the wall of worry, right? And then they can short the vol back down. Which I think is probably more relevant right now. I don't think there's any action that he can take at today's meeting long term that's bullish in any way. I mean, one way or another, the dot plot is going to have to be heavily trimmed. Even if the Fed wants to be overtly dovish, I can't see us getting more than a couple rate cuts in 2025 promised, and realized probably even fewer. If they cut today, though, they lower the cost for short-term borrowing sufficiently that small businesses don't get just fucking wrecked. Which may be, the overarching goal here is to keep short-term debt relatively cheap. When P Daddy live 2 p.m. I can't tell if it's really you or if it's just Grim2 in a gaff hat because he keeps usurping your name. Or turd. Someone. Fuck off, Mikey.
Costellosaurus put their pickle in my jar, so when crash. 3.
So when crash. We need inflation to get higher still. Which I said 3 months ago. It's still true. It's moving up, but it's not up enough. I've never heard of suit supply. Someone calls it a FOMC a numsy tasty yeet treat. It sounds super dangerous. Yeah, I've never even heard of suit supply. Suit supply is garbage? Okay. I mean, just go get a good suit. Get like Armani or Tom Brown, Tom Ford. Those are like good baseline suits. I like my suit supply suit. Still feels great after 5 years. Okay. Check for local Italian tailors. I can't think of a good chain. Suit supply had a better quality 5 years ago, but it's gotten worse, and the price has gone way higher. Oh, okay. I haven't. I admittedly have not bought a suit in well over 8 years. It's a fine baseline suit. Yeah. You don't have to get their like custom tailored ones, which are like 6 grand. I love this rally. Zero variance, just up. Until they can get their positioning secured. That's basically how this is going to go down. $60.7408. I mean, last night it kind of looked like they needed to get just above 70 to get away from like the negative gamma and gain a little bit of positive support. It's true of all MTM suppliers. Quality down, prices up. I have a suit from an off-brand Indian MTM site that I wear occasionally. The rest are fully custom. Nobody notices the difference. Hmm. Cricket suits made completely out of ostrich. I'm glad a 6K suit will never be my problem. Well, sometimes it's a write-off. Work clothes are tax deductible. Just work for a company that buys you your suits. I only buy oil when it goes above 70. You know what company I work for now? It sounds like you need to buy yourself and the rest of your employees identical custom tailored suits and then write them off. Or just hoodies. I don't know. Does Dillionaire provide a how to use Discord tutorial? No, but Discord does. They have a few videos that can get you uh, moderately acquainted with the basics. What a wild morning. That's a crazy bounce. Yeah. It would have been less crazy if we just opened above the collar in the first place. Does Gamma Strike have some scanners that can buy TA with options data, like pullbacks above GN or pullback near GN? That's kind of what the meatball does. It's funny how all the employees are 6'3". I'll be able to get the same fit on all the suits, just different colors. Perfect. We've seen this bounce morning of FOMC so many times, though. Yeah, anytime bulls are just destabilized before major data, they'll usually push to stabilize their positioning into the data. It's really common. That's why I straddle shit. I'm usually out of my FOMC straddles before FOMC actually happens. It's pretty rare that I have them into the meeting itself. Just the usual shit. Gamma Strike tutorial live stream. Interesting. I don't know. Haven't I done that already? Should you really only do verticals on days like today for 0 TTE? They tend to be a little bit better because you got to sell the vol, and it makes the upside a little bit more profitable. Especially if vol crushes to the upside, which we're not getting a ton of, but we're getting a little bit. What do you care? You didn't even sign up for it. Well, all the features aren't released yet. You know that big juicy gamma up at 6,100? Wow, if Powell's bullish, yeah, they're gonna push for that. That's a synth short, though. It's not really very bullish. It's just huge resistance. CMG dead? Not necessarily. Having a really hard time with 65, though. What did you think it was? Bullish positioning? All the calls are sold. I do plan on doing one to show new features and share some best practices. No, we're doing a roundtable with the quants, which is not the same. How did I confuse you for someone else? I wouldn't play leaps on Oxy. I would own shares of it, but I would never buy leaps on it. Buy puts after a sell-off. Buy calls after a run-up. Can't lose. No, Cobra. I was talking to Cobra, not you. No problem, Castellosaurus. I missed buying Nvidia yesterday. Fuck you, Cobra. Good morning. You're still trying to leverage free accounting services for Gamma Strike? I don't know if I could have an accountant that I trust that wasn't already a member. Listen, I'm all ears. Are you long Google, Gherk? I was for like part of the breakout to the upside. Like last Wednesday. I'm not still long though. I took profits on that shit. This Thursday at 8 o'clock, Costello. There's not going to be a gamma. We're not making a scam coin for Gamma Strike. Why is it that people want that so badly? What the fuck is wrong with you guys? Dork, I already told you now. Pickle coin's not mine. I hate to admit that I haven't utilized it. What, Gamma Strike? Really? Some of that shit's just intuitive. Like, I could see getting lost in the Greek charts, like the Greek by strike charts. Because those are a little harder to interpret. But, like, neutrals are super easy to interpret. I hope they fucking ban TikTok. Stupid platform. Dork, no one's paying you for your likeness. Just enjoy the free publicity. I'm just around with much. Probably been logged in a couple of months. I've been busy with a baby and a new job. It's all good, man. When you're ready, it's there. It's only gonna get better, so like fine wine or cheese. Put a small GS logo bottom right on the VWAP hat, kind of like a copyright. I just need Gamma Strike hats. Because that'd be cool as fuck. Tom Ford Gamma Strike hats. I mean, you know. Guess we could write them off. LRCX goon time. It's trying. I'd like to use the platform at some point as well, but I don't have time right now. Probably after the new year. I was doing pretty well with it. Nice. Well, you wouldn't get a Gamma Strike credit card. You could write off Dork's Gimp suit, too. No, never Velcro backed hats. Or fitted hats. Hats with straps are for trashy people. You can use Dork as a model for the clothing. Yeah. Like a Wish version of Chalamet. Oh, you're gonna get timed out so hard. T-shirts, high quality hoodies. Did you know that FlexFit makes visors? I did. I'll model for a sponsorship. Ooh, and we could use that to pump up your OnlyFans numbers too. Wabeef. So, like, if you want to see more of Washington Beef, check out his OnlyFans, or you can put a link. Like a winky face. Is this gonna catch a bounce or what? Nope, just right back to the color. If you guys are thinking right now, man, I can't believe I'm missing out on this super cool price action, you're not. Wait, is this why your wife stays with you regardless of your gambling habits? You're just super hot. Well played. Yes. What a Chad. If it would be clipped or put somewhere in, don't have time to watch or listen in much lately for the Gamma Strike stuff. I mean, we'll save the videos for people to like watch later. Whatever happened to Houston Wade? Last I saw, he was farting into Ziploc bags and selling them on Etsy. I have no idea. Is he not still doing that? The real question is, why does my wife stay with me after all the offers you've made to take her to Paris? In all fairness, I've only offered to take Bert to Paris once. And she probably thought I wasn't serious. No problem, Grillin. Yeah, also check the Clips Tags channel. It gets updated occasionally. Paris, France, or Paris, Kansas? I don't know. Roguish Dimples indicator is firing. Don't worry, Simo. I would never break apart something as beautiful as what you and Bert Stew have together. I found out they call it Bumble because after a date, it stings when you pee. That was pretty good. Would you wreck my marriage? God, no. I know too much. I can't, I couldn't even. I think that's your defense mechanism. Not many people can put up with me long term. They can't handle all my awesomeness. I said you didn't think I was serious. I didn't say I wasn't serious. Now that you have a bidet, you need to demand a trip to Paris, not fucking Virginia or wherever you guys go. Paris. Paris shopping. Max out one credit card of your choice. SEMO will just have to sell more calls at better strikes. No, Paris, France. God damn it. Yes, I know that. Not Paris is in the U. That would be. Why would I say that? I wouldn't want to go to those places. I mean, it kind of smells like shit. She can max out one credit card of her choice. What if she chooses your credit card? What? No, that's not how that works. Hold on. Your credit cards. You're married to her. I want to go to Tokyo. I don't think you didn't tell her it had to be my card. And I think your card has a higher limit than mine. She's smart. She would choose your card. I'm out. Christmas? And by surprising, Xmas, by surprising? I mean, we've talked about it for months. Oh, you're gonna go to Ireland in the winter? Huh. Not until next September, October. I just booked everything. Take your Latino wife to Ireland in the winter. That's what it sounds like. We're going to Tokyo in March. Pretty excited. Nice. They're just going on vacation next fall, and he's using it to not buy Christmas gifts this year. She wants to stay in a castle. There's castles here. You could buy a castle. Jen knows what's up. I kind of want to take profits on my LRCX. Like 17%'s fine, right? It's not great. Ooh, these are 22. Castle sounds like a lot of upkeep. Is it? It's all rock. You just like break out a power washer and just fucking go to town. I would argue that you could get a castle cleaner than you could get an actual home. They are cold. They're very cold. And then when they get warm, they stay warm way too long. You've never pressure washed drywall? No. That's how you get mold. Check DMs. Oh, you're doing like a whole like winter wonderland thing. Are you gonna do the archery? You're definitely not gonna do any kayaking. You should pick up some of the Ashford Castle the T-tins, whatever these are, T-tins. Mrs. T's Tippy Earl Grey. No, T-tins. They're tins full of tea. I'm gonna book the same weekend as you, Popcorn. Just let me know when it is. I'll have someone to pass Colonel off to. I'm not watching your kid. I'm gonna go kayaking. Oh, come on. Nope, you're gonna have to do what other parents do and try to have sex on the same bed as a sleeping infant. Do they have tiny baby beds? Cribs? Yes. Mm. It's gonna be like a Best Western when you get there. They're gonna be like, all the cribs are taken. I got first place for being Rapunzel once. I made my own castle tower. Cash prize. Nice. Like in a costume contest? What were they giving out prizes for being Rapunzel for? Breakout confirmed at 8250. I don't know if it needs to get that high, but yeah, that would help. You Muppets. I'll leave him with the Swords Master. Huh. It's an interesting twist of irony. The Fed is expected to cut. Them doing so won't cause much of an SPX reaction, will it? What will a hawkish narrative dot plot do? Cause rates to go up? Yeah, I don't think them cutting would actually cause. I think them not cutting would be the most averse reaction from the market. I expect that the dot plot will be pretty hawkish no matter what, though. The real rates are already very, very close to being below the long run neutral rate. Costume, yes. Oh, okay. National Lampoon's Popcorn Trader Christmas. I'd watch that. Ashford Castle is the best hotel I've ever even stepped in. Worth going to Ireland just for that. Hmm. Not the potatoes and rocks that you can kiss upside down. I'm Irish and I don't even want to go there. Well, part Irish. I'm regarded. Why is the Fed cutting? Because they also are. No, the rock's right side up. You just have to hang upside down to kiss it. Nothing was more boring than Ireland as a 16-year-old. You didn't go. Can't you drink? You could have gotten drunk. The ultimate Irish pastime. And if you couldn't find any lasses that were interested in you, there's always the sheep. I think it was 18, and they wouldn't let me pour the perfect pint at the Guinness factory. Hmm. That was so bad. Ha! Nice. Punny. If you want a sheep, you have to wear a kilt. The sheep have adapted to hearing zippers. I mean, Ireland historically is a shithole. It's like New Jersey. It's more like old Jersey. Hmm. Duh, you can't drink at the Guinness factory, but a local pub would serve you and not bat an eye. Yeah, I thought the age of, like, I thought you could drink, like, cider and lager at 16 or something like that. You can't get whiskey, like hard alcohol, but do you really need that when you're 16? I had a friend who went to Ireland on her honeymoon. She was miserable the whole time. We're really selling this to popcorn. I think I was also in the stage of life where I'd get super disappointed when my friends experimented with alcohol and narcotics. Oh, you. I know exactly who you were as a teenager. Yeah, Tesla's going to 500. Looks like it is, at least. I remember puking from drinking Budweiser versus Bud Light one time. I didn't know the difference. One of the first times I drank. The first time I drank, I got lost in the woods and I ripped my pants off. I was like 13, just wandering around the woods in my boxers, piss drunk on like a handle of, I think it was like Popov vodka. And then the cops found me, and my mom had to pick me up from the hospital. I didn't rip my pants off, so I stepped in like some mud and I lost my shoe. And then my pants got caught on a tree and the side of them ripped off. And so they kept like the ripped part kept catching on stuff, so I just took them off entirely. Smart, yeah. I mean, it was pretty awesome at first. They took you to the hospital? Yeah. Yeah. I don't like this rejection on LRCX. Would you be happy if Santa brings you VIX 20 for Christmas? I almost got VIX 16. But yeah, it'd be pretty cool. Should I buy more TQQQ pets? Hold on, I need to go look at that. Ah, there it is. Where the heck was that root? I think I'm gonna close the rest of my root. Doesn't look like it's dropping anymore. Huh. 13-year-old Gherkin just creating solo Lord of the Flies scenario for himself. Nice. No. So there was this girl I liked, and she had the vodka, and her dad lived out on Long Island, and she had like friends out in Long Island. And so I went out there to meet up with her, and her friends were drinking like in the woods by the beach. And then I got really shit-faced and kind of wandered off from the rest of the group, but I took the vodka with me. Taking advantage of the principles of scarcity from a young age. Oh, one of those people? Well, by the end of the night, I realized the only thing I really liked was the vodka, and so I figured I'd keep that. I don't even remember her name. You know, Gurk, just when I think we come from two different worlds, you tell a story that any guy in the Midwest can relate to. Life experiences tend to be like that. Probably like Chantel. No, it was like It was something stupid that was misspelled, like Megan, but with like an H. Just replace Long Island with Shake Shack. How far out are you getting TQQQ puts? Just picking up some for Jan. Beyond $5 2027 calls are under a buck. Yeah. So the 2026 calls are even cheaper. Well, I think someone called the cops on me because I was wandering around the streets in my boxers with a giant jug of vodka. No, I'll probably wait to see how the J-POW thing goes down. Ew. God, that fucking call wall is just stacked. Hmm. What did your mom say? Not much. Just drove me home in silence. You know, the worst outcome. The silence of disappointment. Yeah. And then the next day, I got lectured for like 8 hours on abusing alcohol and for some reason unprotected sex. Do we see 6080 before 2 p.m.? I don't know. Gamma's not going to be very supportive here. I'm not able to get back up to 70. Bulls seem to be having a hard time holding on to what little positioning they do have. Yeah, I could see us getting back to 70 and then running into resistance again. We can also just fall back into the synthetic short at 55. Those short-dated TQQ calls, I don't know. I mean, in the near term, I expect that I can get probably some discounts on the same contract. I'm not done entering the position, I don't think. Unless I just get rugged super hard. My mom's not Italian at all. The dollar is doing really well against the euro and the pound today, too. So bear steepening, but margin expansion. Yen's at like 154. Gherkin's telegraphing that QQQ is over Gamma Max to us regards. What? That's crazy. I don't have any current thoughts on Reddit. I'm not paying attention to it. Probably slightly bearish. Quite a lot of slow calls at 80. Hmm. Yeah, futures margins for the intraday before into the FOMC meeting. If we lose 63, 62 and change, probably fall back under GN. sort of timeline would you be looking on SROF? I don't know, 3 to 4 more years. We need to get to the part of economic recovery where we start to see a lot of government subsidization. We've seen a lot of promises of that as we've waffled through economic uncertainty, but we haven't actually seen any realization of it. What if we just don't subsidize failure? But that's what every modern economy is built on. That doesn't even make sense. No, because it wasn't really at 60. Puts one up a lot, though. Like spreads just blew out on VIX, but it really wasn't at 60 for any period of time in which you could have traded that. What if every modern economy is wrong? I mean, they mostly are. Like, it works, and that's why we do it, but it's definitely not the best system. If you were in Schwab or TOS, you just couldn't trade it, period. Yeah. Repo's not gonna hike rates to 1,000%. It's ridiculous. The back of your head is ridiculous. Yeah, fair. Yep, Carvana's still going down. I think the dot plot can hurt them a little bit. Glark, I don't have Carvana TDs. I mean, I don't think this is the end of Carvana, if that's what you're worried about. Mhm. Do we get bearish continuation if they don't cut and we just keep going up? Possibly? I mean, the most likely near-term outcome is that we would push up if they are in line with expectations. I mean, I don't know how high we're gonna push. There's not a lot of positioning to the upside. Do you have any thoughts on NAM? Old price alert of mine went off. Newmont? Jesus. No. I'm guessing their gold production numbers aren't keeping pace with their competition. But I'm not really entirely sure. Their dividends kind of fucking them over a little bit right now. Yeah, because I feel like with gold prices moving the way they have, a lot of the miners have gotten kind of wrecked because they haven't ramped up production fast enough to catch up with the gold prices. I should get some lunch before Powell. I mean, SREF's uranium. That's not really going to be the same as like utilities or energy providers. But treasuries are starting to look attractive. I mean, the 20 years in an okay spot, like 4.68. The 30-year at 4.6 isn't awful. I'd like to see those move higher before I'm not really interested in getting in the 20-year unless it's back above like 5%. But above 5%, yeah, I would probably start plowing money into that. Just say the first part about treasuries, leave out the second part. 20-year 8% pop poopy. I'm just curious on your thoughts, given that this could correct. I gotta pick one of these managed products and let it sit there for years. I mean, commodities will have their day in the sun eventually. So, I mean, sometimes those are a safer bet when equities are overvalued because commodities will tend to be cheap relative to them. And then when and if money flows out of equities, that's one of the first places it'll go. You just want to be a man of the 80s, don't you? I mean, it's just realistic. And really early 90s. I mean, that was the peak of rates, right? You're gonna post a pic of your desk setup and monitors? I have before. Yes, I have. It's like somewhere in the announcements channel. You mentioned you want to buy the market unless it corrects 10% or so. Trying to figure out how to build up a safe pile of money, preferably without buying at all-time highs. I mean, the forward yield on bonds is better than the forward yield on equities right now. Uh-uh.
Someone put their pickle in my jar 3.
Good boss, I'm having trouble seeing how a rate cut or dot plot can be bearish in the short term. Wasn't it already priced in as far as FOMC goes today? If the market wants a cut and gets it, market happy. No? I said that. I said it's not short term bearish. It's not bullish in the long term. It's also, I mean, if the dot plot is hawkish, as expected, that's not good for small caps. FOM sees it too. The 20-year isn't topping, Poopy, and you know it. Yeah, I mean, that's definitely how it gets traded. Boom, 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 boom. Yeah, the options chain on Tesla supports a move to 500. They could get rugged today. The only reason for Powell to cut today is to avoid disturbing market expectations. It's not bullish, it's just nothing. Thanks, Poopy. I love how no matter how many times we go through these FOMC meetings, everybody always wants to know what's going to happen before the decision is made. It's true, Harry. What did J-Pow tell you he's doing? The stupidest possible thing. Comes out at 2 o'clock. Yeah, but I mean, like, why position at all? Like, there was some value in getting a straddle yesterday and playing the, like, pre-FOMC price action. But why do you, what makes you feel the need to play the FOMC decision? You think you're gonna make money on it? You won't. It's a terrible 15 minutes expiry day. All the fucking options are overpriced. I don't want to spend $3 on out of the money puts 10 minutes before they expire. The days of VIX at 25 going into the fucking FOMC decision were in 2022. That shit doesn't happen anymore. There's no like 150 basis point swing in either way before Powell talks. It'll spike wildly up and down, won't it? Just immediately stop out anything directional. Yep. Yeah, the MM just steals everyone's money, and then the price can move. I've traded like fucking 30 of these things, and unless volatility is exceptionally high, like above 18 or 20, they are just not profitable. So it's best to just do nothing. The actual best position for these is nothing. The number of times that we close at the same price that we entered the FOMC decision at is relatively even with the number of times we close higher or lower. So even like neutral positioning going into the decision fucking sucks. So if you're like, oh, I could do like an inverse butterfly and I'll just make money whichever way it goes, sometimes it just doesn't go anywhere. Everyone's always trying to gamble on it. And the options are like fucking IV's like triple what it was yesterday. Why would you buy this dog shit? They're not increasing your margin, they're increasing the amount of margin you have to carry because of the potential for volatility. I'm not even saying sell them. That's too risky. They're for like retail. You think they're giving you extra margin to play the FOMC decision? That's a good one. 6150 end of day? No. It'd be really hard for them to get it above 6100. Even if Powell's dovish as fuck. And it doesn't matter if Powell's dovish, because rates will just keep going up. The more dovish the Fed is, the more the bond market's going to resist them. The best decision today, and this is how I know this is absolutely not what they're going to do, would be to no cut. And pause. Because real rates are at 2.05 and inflation is rising. The consumer reports show that the consumer cannot bear the cost of that inflation, which means that margins need to contract or companies need to lose market share. Either way, revenues are going to decline. And when corporations stop pricing forward all of their increased costs and a premium onto customers, then inflation can shockingly come down. Do you think playing Uber long and Tesla short here could be fun? I think they're both dog shit companies. Just short them both. Why would you long Uber? They have arguably one of the worst business models in existence, and it's entirely funded by debt. Someone big is doing the opposite of what I said. They're going long Tesla, short Uber. I mean, Elon's not going to let Uber use his self-driving cars that don't exist. No, him cutting doesn't actually help the banks here. It hurts them. And they'll lose the protection of the Fed that they have had up until this point. Because once real rates are below the long run neutral rate, the Fed won't have any more control over the long end of the curve. Neither will the Treasury. So no amount of, I mean, if inflation goes up more, right? Well, it doesn't need to if the Fed cuts today. Right? Inflation's already at 2.7. Rates are at 4.5 to 4.75. So we're already like, I mean, 2.05, somewhere between like 1.85 and 2.05 on the neutral rate. And so, I mean, and we've seen that the any stability in the top end of the curve has already been lost. And if they cut again, it's just gone. Even if inflation were to fall, the neutral, like the real rates will still remain below the neutral rate. I think of it more from a mechanical standpoint. What mechanical connection do they have? Uber's in like the transportation sector. They're not even in the same ETFs. I mean, mostly. And Tesla, like in those ETFs, Tesla's weighting is great enough that it would just bring down the price of Uber anyway. That's the problem with those fucking pair trades against like massive market cap companies. You're like, oh yeah, like Nvidia goes down, and then their competition can get some more price improvement and gain some market share. But no, Nvidia goes down, and the ETFs just sell fucking everything, and then everything else in the sector goes down too. That is how ETFs work. The Fed has never had that much control over the long end. I mean, they've exercised what control they do have. And yeah, they've had a decent amount over the last 2 years. Are you just being contentious? I can't tell. Are you mad because we said mean things about Ireland? 2 to 3% in the next couple of months? I would expect more than 2 to 3% if we're going that long of a timeline. Short Airbnb, Uber, and Carvana. About one DTE puts at 11:45. No hedge. Raw dogging. Oh god. I don't understand what early termination fees have to do with Nvidia. Exchange traded funds, popcorn, not early termination fees. People already are selling all of it. Is everyone missing that? Everyone is selling everything while you guys rally for a new top. Look at this shit. The entire market is oversold as fuck right now. It's all sitting on the back of 7 companies, which are all massively overvalued. And you guys are like, I wonder if my 6100 call is going to print today. Seven magnificent companies. They're not that magnificent. $61.10, thank you. Didn't B of A give a sell-off warning because their funds are back at record low in cash holding? They're all record low cash holdings. Look at rates. Their cost to carry on the long end is more than they can afford. They've been drawing down on reserves for like the last 3 months to manage the difference. So wait for a reasonable level. It'll require a lot of patience. Why would that cause a tech sell-off? How much Bitcoin do they have? All of it, actually. I mean, no, it's fine if people were like, okay, what's the bullish outcome here? But it just doesn't look good. Believe me, after a year and a half of this shit, I'm more than aware that the market can get pumped regardless of the data. You think they've oversold the rest of the market so they can drop the 7 and rotate to the rest of the market to hold it flat? No, they've dumped it because it's all worthless shit that doesn't make any money. Almost the entirety of the S&P earnings yield is concentrated into like 10 fucking companies. Why would you want to own the rest of them? At all-time highs. You wouldn't, so you sell them. You sell them and you put more money into, and then you create tons of concentration risk. We can't crash before OPEX. Nope. Too much is on the line. 2.1 million in the money calls. Well, it's the in the money calls. It's the charm from the in the money calls that are largely supporting our current prices. This 2.1 million in the money calls are like they're just accruing delta, right? So yeah, I mean, you got to wait till after OPEX. That'd be interesting, though. I don't think we get a crash necessarily, but we could get a decent pullback. Big fucking OPEX. When will all that concentration go into GME? Literally never. So maybe 5% near term, 10% over a few months. I mean, if you want to wait long enough, you might be able to get like 50%. What the fuck is note? Oh, Jesus. It's already run. What opinion do you want? You missed the boat. That's my opinion. I don't fucking know. It's got 2 strikes. Fucking up 84% in 2 days. 3 days? 5. Whatever. Why are you trying to top tick some random penny stock that's ripping? The fuck are you guys... Is this what the kind of shit you guys are doing all day? This is not going to make you money in the long term. Stop asking me what I had for lunch already. Wait, who? Me? I didn't ask you what you had for lunch, did I? I mostly do plumbing. Okay. I'm only here for a good time, not a long time. Why can't everybody just focus on the same thing? Making slightly more money every week than you had the week before. It's a lot less stressful. Just stop pushing the thing on the options calculator all the way to the right. Because ADHD, Gherk, ADHD. But I thought the supply shortage was over. Like, don't you guys have your meds back? Can't you polish something for like a couple hours until there's a good entry? I'm unfortunately unmedicated. It's okay, Popcorn. They don't make medication for what you've got. Hmm. Dollars at 107.79. No, all my 60, 70, and 75 puts for this Friday are gone. I have puts. I have some Jan 6000s. And I have June 25 and 26, like out of the money Vegas shit that I bought a couple weeks ago. You obviously didn't read my essay about lunch, or you would have had a different reaction to it. I didn't see it. No. Where was it? Wait, was it in the YouTube chat or is it like on the Discord? Hmm. In chat? Hold on. I don't think it posted, Bert. Love how the hours leading to a big event are filled with stupider than usual questions. I mean, everyone's trying to make money off it, which is probably not a great idea, but oh, okay. That I read that. These have straight puts on JanoPEX or sold spreads. I have like calendar spreads on them. Like I have like puts sold intraday against the 6,000 Ps. I have to net off the theta decay at least a little bit. Are they selling the rest of the S&P to pay for GME? No, they're selling it so they can turn around the sell-off in Nvidia and try to keep pumping Google's synthetic qubit. No one gives a shit about GME. Let me be very clear. The company has zero growth prospects, and it's already trading at 100 and something X, like 150X forward earnings. It's not an attractive purchase. The only reason institutions have bought more of it is because its market cap went up, and they have to. If its market cap goes down, they'll sell all the shit they bought. I asked you about a firm when it was 12, so I'll ask again a year later. Do you still think a firm is not a good long-term play? I mean, it's kept up with Upstart. I think Upstart's a better company, but a firm is like secondary to it. It's underperformed Upstart quite a bit. So I was bullish on Upstart and less so on a firm. I mean, I think they won't last as a company in the long term because people are already defaulting on their loans from them. And if they're unable to, they have the same problem Upstart does. If they have to start holding those liabilities on their books, they become very rapidly exposed to the defaults on those loans. So as long as the pass through from them to, a major bank or something, someone buying the loans off them, is liquid, and those credit markets are functioning the way they should, then they don't carry too much risk. But if liquidity in the credit markets breaks down, then they have to start holding the loans on the books, which exposes them to the defaults on those loans. She still zero DTEs against them or weeklies. Depends on what's going on that week and positioning. Sometimes I'll sell more theta against them, sometimes less. Variable. Nissan's the one in trouble. Honda's just trying to absorb them on the cheap. They're all in trouble. Like, all the car manufacturers are fucked right now because rates are going to continue to rise, but people are going to lose jobs. And then that's before you even get into the tariff issues that they're going to have to deal with. They invest billions into EV that no one wants. I mean, there's people that want them. Like, I don't care. I'd buy an EV. Fucking the parking garage I rent from has a charger, and I never drive anywhere that's more than 300 miles away. Why wouldn't I get one? Like, if I got a new car, I'd probably get an EV. This is like, it just makes sense. There's a lot of people it just makes sense for. Why the fuck would I pay for gas? Yeah, I agree. Not all of them have. Toyota didn't. Toyota's been really conservative in rolling out electric vehicles. Yeah, cheaper fuel, less maintenance, fewer moving parts. EVs have tons of maintenance. No, they don't. Teslas are just pieces of shit. But none of the maintenance is like mechanical. It's just that like all the electronic systems on it fucking fail all the time. I got offered 50,000 cash to refinance my mortgage and add that to the principal. Is this what being rich is like? I mean, are you refinancing at a lower rate? The older Teslas were a lot better. If it was one of the old ones, they were way better quality. There's people where an EV doesn't like it doesn't make sense. Like if you live, fucking 50 miles from your nearest Walmart, it'd be really shitty to have an EV. Unless the only place you go is your nearest Walmart, in which case you can charge your fucking car at home. If I take that offer, I could put 50 grand into Fubo and potentially pay off that added principal in So anyways, I started HELOCing. You're gonna buy a Miata and then full port Fubo right before it goes out of business. Why do you want to ruin Atomic's port like that? Stop giving away alpha. No one cares about FSD. It's bullshit. They don't even have anything done. That's not true. I've never had electrical like gremlins and Toyotas before. Hmm. I get an EV when either Honda or Toyota releases their solid state version. Mm. I'll get the equivalent Lexus. You think about Walmart? I have leap calls, but it's at all-time highs. It's doing well right now. Something has to trade up that's comparable to Costco. Walmart's definitely with Sam's Club. Walmart's definitely the company that fills that space. I don't think Toyota is going to pick up Nissan's bags, but if they do, I mean, they'll get it on pennies on the dollar. Could be bad for them in the short term, but I'm sure in the long term it would be advantageous. Otherwise, they wouldn't do it. I didn't know you cared so much about the environment, Bob. I just imagine you like rolling coal in your lifted truck, so I didn't. All right, I'm gonna go make some lunch. I'll be back in a minute. It's almost party time. Oh, look, this has been exciting. Ooh. World's lamest megaphone. Seems more like the consolidation is contracting rather than expanding. You missed a thrilling EV argument. Was it between idiots? Yes. Zoom in, just the little tail end. Is that a chopped cheese? It's tuna on wheat. If you get the lens close enough, even a micropene can look big. Suppose so. Hmm. Don't put fucking mayo in tuna salad. I don't live in the Midwest. Celery, basil, red onion, black pepper, olive oil, a little bit of Dijon mustard, lemon juice, red wine vinegar, some sun-dried tomato. Did I say olives? Olives. No, no mayo on the bread either. It's got plenty of fat from the olive oil. Canned tuna? Well, jarred. I get like the little Tonino fillets in the glass jars. Why would you use sushi tuna for tuna salad? I don't think so, humbug. Someone might be, but... What's your average in Fubo, if you don't mind saying? I think it's like negative. I mean, do you want the like my actual cost basis or the net now? Like with or without covered calls? Actual? I think it's like $1.27. After the covered calls, I think it's negative 87 or 86 cents a share. None? That shit smells terrible. I made chili last night. It was bomb as fuck. Nice. Can we get a pre-J-Pow recap? He's probably going to cut rates. Which is in line with expectations. And thus should already be priced in. If he doesn't, woo-wee. That's the efficient market hypothesis. Me too. I mean, the market maker's pricing in like 70, 80 bips from spot right now. Okay, you know why vol crush occurs, right? I'm just battling pedantic questions, Nitu, alright? So volatility rises in anticipation of an event. Because there is an outcome from that event that could be unexpected. If the unexpected outcome occurs, then volatility will keep rising. It will not, quote, crush. What's a muscle, mommy? You know what? I don't want to know. Chew louder in the mic. I'm running out of crispy chips. I made a tuna salad. Best course of action for FOMC minutes are to wait for the market to pick a direction. No, just wait till tomorrow. It'll probably just depend on if we're above or below the collar when Powell starts speaking. Right? Just low and slow, Cobra. As long as you keep the oil, like, below the smoke point. Or below the smoke point of whatever fat you're using. You should be able to avoid burning your grilled cheese. Hmm. Wouldn't JPOW 35 minutes? I really should have more holiday themed pickle, like. I think the only ones I have are Christmas. I'm gonna need to make a logo set for the other holidays. One sec. Hmm. I'm personally offended there's been no Kwanzaa themed graphics. Get wrecked. You know, I've talked to Stefan a lot. Stefan. I feel like he's more the anti-menorah kind of guy, you know? Like he's very pro Russia, anti dreidel. Mazel tov, dork. Come on, hawkish ease. You guys are so silly. Ooh, 131.65 repo. Just do like 85% of the at the money straddle. Huh. I mean, shit like that is just the MM doing their job. The MM's job is mean reversion. Reduce volatility and ensure markets are liquid and stable. Don't worry, I had no stops today. Maybe. Ooh, there's a few Fed members voting for. Hold on, I'll pull up the dot plot in a second. U.S. interest rate decision actual 4.5, previous 4.75. Medium rate forecast long run actual 3%, previous 2.875. Median rate next year 3.875, forecast 3.625. Median rate forecast next 3 years 3.125, matches the forecast, but higher than the previous. Median rate next 2 years actual 3.375, forecast 3.125. Fed projections imply 50 basis points of rate cuts in 2025 and another 50 in 2026, which is what I said earlier today. So that's the dovish. I mean, we may not get those rate cuts, but that's the dovish outcome. Policymakers see a 4.3% unemployment rate at end of 2025 versus 4.4 in September projections. Fed policymakers see end 2024 PCE inflation at 2.5%, 2025 PCE at 2.5 versus 2.1 in September. Core seen at 2.5 versus 2.2. So higher inflation, higher rates. Policymakers, we see 2.1% GDP growth versus the prior estimated 2.0 from September. And considering the extent and timing of additional rate adjustments, the Fed will assess incoming data, evolving outlook, and balance of risks. Cleveland's hammock dissented in favor of no rate cut. Ooh. Fucking spicy. U.S. rate futures price in more than 90% chance that the Fed will hold rates at the January meeting. Fed officials' median view of Fed funds rate end of 2024, 4.4%. Median view of end of Fed funds rate end of 2025, 3.9%, which is 0.5% higher than previously assumed. Well, this is fun shit. Oh, fuck. The Fed lowered the reverse repo rate by 30 bips. Dork. What a cool time to have puts. It's because I bought TQQQ calls. Smite me. Can you hear me? Get fucked, idiot. I'm 200% on my raw dog puts. No day trades, no settled cash. See you in the AM at break even. I mean, you'll break even today. You don't even probably need to wait that long. That's fucked, dork. Where can this bounce? I mean, hold on. This is pretty bad. I need to close some stuff. JFresh, I have a question. Do you think that Roe is being properly hedged currently? They're working on it, Gherkin. Imagine your Yuta raises tonight, Black Thursday. Roe hasn't been in their equation for years. We just went through a hiking cycle from the Fed. Of course it is. No, we didn't hike. But we just came out of a hiking cycle. Roe is very much part of the equation. J-Pow did the stupidest thing possible. He cut rates. He did a hawkish cut. Yeah, VIX is just taking off. This is fantastic. You know what's even cooler, Dork, is leverage on the carry is just rocketing alongside the market drop. Someone needs to borrow some money. Forward yield on volatility, negative 4.16% and rising. J-Pow's got to come out and say some stuff. Nice. Say some nice stuff. Hmm. 20-year at 4.716. Hey, Poopy, one step closer to 8%, man. I'll see you there. He should say, I gave you all a year, and shake his head. We gave them more than a year. I'm gonna buy more all the way up, you monster. 4.5%. I wonder which regional banks will fail tonight. 10 years getting real close. 4.448. You think the 20-year will hit 8%? Yeah, 7 to 8. How much would you want to get paid to take on our shitty debt? The cut was in line with expectations. Why so bad? The dot plot wasn't. They're projecting higher rates for longer across the next 2 years. It's a very, very hawkish dot plot. Rate cut, no one gives a shit about. That was just going to push rates at the top end up. It's the projections. Don't get too bearish, Gherkin. You know what happens when we get too bearish? We bounce off gamma neutral. It's fine. I have trail stops. It's only you guys who like hold on to your fucking in the money put and act like it's gonna pay for the rest of your life. I just closed that shit. Fed cut equals long end rates up. I could not have been more clear the last few months. I know, and I told you even like a year ago. It's okay. Slowly you're becoming the economist that you want to be. And I couldn't be more proud. I know you did. I could have bought a 6,000p this morning. Yep. They were cheap. I mean, relatively. The descent is bearish too. Yeah, very. That's a big surprise. Seems mortgage rates might be higher for the foreseeable future, but houses will get cheaper. Like they're supposed to. They will. You'll see. They already have been. I mean, I haven't been wrong. House prices have dropped dramatically. It's regional, obviously, but eventually it all finds a neutral ground. Sold your house yet? Have a buyer. But cash, which means I can't finance them, which is kind of shitty. Are you renting out closet space to your cat? I'm gonna kick my cat out. I found evidence that there has been a mouse under my sink in my kitchen, and my cat has not killed it. Because there's no dead mouse in my apartment, unless he ate it. Which means he's not holding up his end of the deal. Oof, eviction. Cats act primarily as deterrents. Mice can sense them and won't enter. True. But my old cat would just kill anything that moved. This cat spends his entire day under the couch. Maybe if I get like another cat, he'll come out from under the couch. I wonder if he's neutered. Huh. Or get a second mouse. Oh. I don't want to deal with mice. Mice in the city are a fucking nightmare. Maybe I should come over and play kitty. Kiki, as fun as that would be, that doesn't address the mouse problem. He doesn't have a name. I just call him Cat. Sometimes I call him Little Asshole. Sometimes I call him Little Asshole in other languages. Just so I can learn how to say Little Asshole in other languages. This is fantastic. We're almost at actual gamma neutral. Hmm. You know, LRCX really didn't get stomped that hard. I thought semis would have gotten hit a little bit harder in the nets, but it held up. Holding 78. 59.99, I think, on the monthly. Don't expect house prices to drop much. Building a house now, material is very expensive and may see further increase in costs in the next year. Oh, they absolutely will because of tariffs, but that won't mean people won't lose their jobs and have to sell their homes. House prices aren't held up by the material cost, they're held up by supply and demand. What's gamma neutral for QQQQ? Good question. $5.25. If you were a bull, would you sell puts here in V? Their primary support down here is at 25. So if they can regain it, then yes. They can turn it around. You showed Gamma Strike? Sure.
Petito Culo put their pickle in my jar. I can't
Petit
come out from under the
culo.
couch until catnip.
I can't
Got
come out
fired
from
my job and I am sad. Need catnip. Also fancy food. That cooked Toro sashimi. I
P.S.
promise not
It's
to
more than
vomit
one
in your shoe
mouse.
again.
Oh, don't say that.
P.S. It's more than one mouse. 3.
Fuck. One sec. Come here. Just had to get the door. They've sold the 6,000 put pretty aggressively on that bounce, so another move down could move us lower, potentially. Yeah, I'm gonna stream JPOW. He's not on yet, but I've got it right here.
Colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years.
The blue line's gamma neutral on the
In
monthly.
the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters.
Anchored above where they currently are.
The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are
that
guided
dot
by
plot
our dual
used to just
mandate
extend
promote
out to
maximum
2026
employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
Do you?
At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment.
So what?
In considering the extent and timing of additional adjustments to the target range for the federal funds rate,
It's the same
the
picture.
committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course.
The swag is
Now,
low
some of the
today.
economic
Yeah, well, you
projections,
just declared
FOMC
victory
participants
like
wrote down their
3 months
individual
ago.
assessments of an
So this is
appropriate
really
path
awkward
the
for
federal
him.
funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated,
What does that
we can
even
ease policy
mean?
more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy.
They have a bearing on liquidity.
For monetary policy, maximum employment, and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations.
You know what I think?
well
I think
anchored.
his suit looks a little
Our
too
success in
big.
delivering on
Like,
these
it's, like,
goals
loose on the
matters to
shoulders.
all Americans. We understand that our actions affect communities, families, and
That
businesses.
might be affecting his
across the country.
swagger. See, this is what we talked about
Everything we
earlier.
do
This is why
in
you go with the
service to our
Tom
public
Ford.
mission. We at the Fed will do everything we can to
That's
achieve
a
our
straight
maximum
hand.
employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smilik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was.
I wouldn't
the
be
right
allowed
call
in these
because we
meetings.
thought
I mean,
it was
maybe once.
the best decision,
But
to
just
foster,
once.
Achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market.
Would you
or
guys
move too
stop
quickly
thirsting after
and
the
needlessly undermine
fucking
our
press
progress on
corps
inflation.
at the
So we're
fucking
trying to steer between
FOMC?
those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level.
She's
certainly
hot,
below the level that would
cute,
hold
maybe.
unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually.
Remember the
growing.
person that asked the
So
stagflation
we
question?
keep an eye on that.
She's literally never
Inflation,
been seen
we see that
again.
story
Yep.
is still broadly on track, and I'll tell you why.
Powell immediately
Inflation
after the meeting was like, "Get rid of that
inflation,
bitch."
As I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace.
That was a
than
pretty
we would
weak
like,
bounce
but it
off of
come down
GN.
substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services.
He shut that
involving the
fucking
fruit.
door
So,
hard.
I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement.
I mean, I just want to be at any official government event and say, I just want to say these words. Hi, Gherk from Pickle Financial. And then that's it.
I think that
They can throw me out after
the
that.
slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's
We've been
just a
watching this for
general sense of what the
years.
committee
That's the
thinks is
first
likely
girl
to be
we've seen on
appropriate.
stream in 18 months.
Sorry, just one quick follow-up. Why, I guess,
That's just not
would you make
true.
those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully
You're way
restrictive.
below neutral,
And as
bud.
for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity.
So it's the people from Canada
So
and
this does seem
Midwest
the
that are
dynamic
like,
in
she's in
2016
town.
during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down
She's
by
not a 10,
50%
Gherk. Don't speak for my
from
people.
5.6%.
She's
to
a solid
2.6%.
Ohio 8.
Headline inflation is 2.5% on a 12-month basis. We're actually in a really
California
good starting
4,
place.
New York
But
5.
since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024.
That's because we have to pay for
so
our
far
health care,
than we had
Van Hills.
expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty
Bert,
is
calm
less.
down from your
And
lofty
so
Ohio
that's
10
more
throne,
strength,
all right?
Right.
We already know.
Inflation
We've
is
heard
higher,
the
as
stories
we
from
talked about.
CMO.
Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also.
You think
it's
Cali
also,
girls are hotter than New York
in
City
case of
girls?
some
I disagree.
people- some
New York
people-
City
I do wanna
girls
say
have
this,
grit, but they're pale.
Some people did take a very.
They lose a
preliminary
point
step
for
and start
paleness.
to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting and said so in the meeting. Some people said they didn't do so, and some people
Miami
didn't
girls
say whether
lose
they did
2
or not.
points
So we have
for
people making a bunch of different approaches.
their public
to that.
education system.
But, some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation, September and October. As I mentioned, November is back on track, but
No, it's not.
Again,
it was higher.
We've had a year-end projection.
3 months of
for
higher inflation.
and
Stop
it's kind of fallen apart as we
padding
approach
the
end of
data.
year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations.
I wonder who's going to ask about
gonna
the
be between
abstention.
2.5 and 3. It's way below where it was, but we really want to see progress.
First level
on
CTAs may
inflation
reduce max longs,
as I mentioned,
5981.
As we think about further
It's
cuts,
a
we're gonna be
little
looking for
higher,
progress
but
on
yes.
inflation. We have been moving sideways on 12-month inflation as the 12-month window moves.
We're pretty
That's
close to the
in part
CTA
because,
trigger. The
inflation
first
was
one.
very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward,
That sounds like it might be
we're
just a few
seeing
days
further
old.
progress on bringing inflation down and keeping a solid labor market.
Chris.
That's it, Greg. You're out of the presser.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through.
You should
any
really
tariffs
pronounce his
as long as
last
their
name,
One-time increases
Rugaber.
and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs?
Like, you shouldn't say Rugaber.
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think,
Timestamp 1444.
There were 2 simulations. One was
Maybe they're
when we're
wrong.
seeing
It
through,
depends.
one was
Whose model? Is it
and I
GS?
suppose there's some language in the see-through paragraph that says, it considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a
VIX
question
is
that's
just
in front of
going
us right
straight
now.
up.
We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy and how to think about that. So we've done a good bit of work, all of us have, each of us has, and it puts us in position when we finally do see
I'm old
what
enough
the-
to remember
what the
when
actual
John
policies
Boner's
are to
name
be-
wasn't
to make
pronounced Boehner.
a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make?
Remember when I told you guys about these cute TQQQ puts yesterday? And how cool they were?
You have to respond more quickly to inflation threats.
And then you guys were all like, Gherkin, you gonna close your puts because the market went up 10
This is also
bips?
a point in these alternative simulations is there are just many factors that go into how much tariffs will even go into consumer inflation.
It's like
How persistent will
the
that
week
be?
before when I told you
And,
guys about the
you know, so
60,
we
70s
just-
and
we
60,
just don't know really
75s.
very much at all about the actual policies, so it's very premature to try to make any kind
Good
of
job,
conclusion.
Ben.
We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be
Oh, the week before
retaliatory
that,
tariffs.
2 weeks
We don't
before
know what
that,
the,
when I said
the transmission of
6,000s.
any of that will be into consumer prices.
You guys, I'm starting to think
To your point as well,
you just don't like money.
I don't. I wouldn't say that we know whether.
You're
the
gonna
last
hold your
episode is or
5,000p
is
Vega
not a
Pooties?
good
I have 5,400
model for what
ones
happened. You
too.
pointed out we've just been through a period.
54,
of high inflation.
52,
We've just gotten
5.
Through that period. That's a difference.
And I have some down
There was
at like
also quite
30,
a bit of diversion of
37,
trade away from
39.
China to
But
other
those are,
countries
I got a
since
couple
that.
years.
That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And
Do you have a
we're just not at that
TQQQ
stage.
put
We're at the
target?
stage of doing what
I mean, I'd like
other
it to go to
forecasters are doing,
85.
which is kind of thinking about these questions, but not trying
I
to
said
get
all
to
of those things.
definitive answers for some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have
Potential for
inflation
Japan to
coming down,
reverse
core
this?
inflation coming
Or
down
they
to
could make it
2.5
way
next year.
worse.
That'd be
I don't
significant
think they'd
progress.
reverse it. I
You see a
I think
slower
I think the
path.
carry
I
is
think that
over
does
levered
take
as
on
fuck
board
right
that
now.
We want to see real progress, but we'd be seeing meaningful progress. to
So
get
everyone's
inflation
already betting that
down
Japan
to that
does
level. That
nothing.
wouldn't be all the way to 2%, but that
I
would
mean, except
that
the
would be,
swaps
better
market.
than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market
Remember
forecast
that
as being
U.S.
in good shape,
cuts
we
are
also
similar
mindful that
for
it is
Japan
still out there
to
very
Japan
gradually
hikes,
pulling,
right?
So far in an orderly, gradual way. But it's
So
something we need to keep
by
an eye on.
J-Pow cutting, he
I guess
does
if I could follow up,
ease
if somebody looked at these
their
projections and
need
also
to
the insertion
push
of the
policy
extent and timing
a little
language in
bit.
the statement, which has been used at times in the past.
Obviously, the scales
and
are
the
way
committee thinks
off,
Maybe it's going
but-
to be on hold for a while. And they said, gee, this looks like it could be the last rate cut for some time. Would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly
Everyone's calling him
smaller.
an idiot for cutting. It
that's-
seems like
that's
it's a
the
great
extent
idea
question.
based on
And
the
again,
market
we're gonna be looking
reaction.
for further progress on inflation as well as
So the
labor
Fed
market
spent
to
2
make
years
those
trying to
cuts.
prop
Timing
up the banks,
just suggests again that we're at a place
and
where
now they're
we've,
just rug pulling them.
assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the long.
So that means that all the policy
you know,
decisions in
we
the prior
are-
2
we're
years were
trying to
pointless.
make sensible policy as we go. And, I just would emphasize the uncertainty, which is, it's just a function of the fact that we expect significant policy changes.
So
and
instead of letting our
nothing
economy
unusual
slow
about that.
down, we
I
increased
think
our
we need to
deficits
see what they are and see
by
what
the
effects
largest
they will have.
amount
We'll have a much clearer
ever
picture, I think,
in history.
when that happens.
Mike.
And we could have just let some banks fail.
Radio and television.
Let some
Even though
banks
you've
fail
cut
and let
rates
the
by
economy
100
slow
basis
down
points
for a
this
little
year, we haven't
while.
seen much
Unemployment
change
goes
in
up.
mortgages, auto
All right, we
loan
deal with like a
rates,
1 to
credit
2 year
card rates.
recession, and then things
you say
normalize
you're
and get
significantly
better. But
restrictive.
instead of that,
Are you running a
we've
risk that the
pushed
markets
everything
are
to the
fighting against
absolute
you
fucking
and
extreme
the economy
in
could
order
be
to keep
more at
exactly
risk of a
rich people
slowdown
from
than
losing
you
any money?
anticipate?
So, the risks that you
No, I'm
the rates
okay
that
with
you
it.
talked about are really longer run
Disappointing.
rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is, most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group.
That's because
And,
Yellen's
I-
pumping
there's
money
no
into
reason
it
to
like
think
it's
a
going out of
downturn
style.
is any more likely than it usually is. So
There's
yeah,
no way
look,
we
it's pretty
close
bright
under
for
all
our
these
economy.
sold puts. We're under
We have
monthly
to
GM.
stay on task, though, and
Carl,
continue to have restrictive
big
policies
negative
so that we
gamma.
can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market
U.S.
pretty close to
economy
where it
very
is.
well.
We're pretty
Pamp
close
it.
to estimates of the natural rate of unemployment.
Yeah,
Job
I'm sure
creation
it's going to
is
probably get
a
rugged
little
on
below
this.
the
Because the
the
rates are
level
going to
we
stay
keep
higher,
within,
which
but
means credit
nonetheless
conditions are
close.
going to tighten over
And
the next
so,
year.
That's what our policy is
Which
trying to
was
achieve.
what I was talking about
Let me follow
earlier
up
with
by
us
asking,
starting to firm. It means
about
they'll
your
have to hold more
formulation
loans
for
on their
beginning
books.
rate cuts.
And the exposure to those
Looking at the
liabilities will
things we
reduce
need
their
to
revenues.
have confidence that inflation
And their
is moving
margins.
down towards our target. Given the fact that you've raised your forecast,
Especially because they're
this year,
subprime lenders and
do
their
you have
default rates are
confidence, or
super
are you
high.
uncertain about the path of inflation going
So
forward?
confidence was our test for raising rates, and we've made. Look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that. We have been for headline inflation. So I would say I'm confident that inflation has come down a great
This
deal.
is a pretty
and
good
I'm
drop
confident
so
in the
far.
story about
I mean,
why
it's
come
it's
down
right
and
to
why
my
that
trends.
portends well.
Hold on.
And I'll tell you why. Again, you do see with housing services inflation,
Right,
which is
we're
one
just
that
a
we
little
really
under the
worried
EMA
about, it
30.
really has
We
come
could
down
we
now
could
quite steadily,
stabilize
at a slower pace than we
between
thought,
2
2 years
here and
ago,
like
but it's
59.38
steadily
still.
coming down as market rents, as market rents start to equilibrate better with
Equilibrate?
new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another
On
big
the
piece of
monthly,
it,
this is quite
has
bad.
returned right to the range where it was before the pandemic. Just for some months this year,
But
it kind of moved up.
we
in
still have a
monthly
long
because
way to
of
go.
used cars and things like that. But we think overall, that
November
should
was crazy.
Generally, be in the range it was in. That leaves non-housing services and market-based non-housing services are in good shape. It's non-market services, and those are
Equilibrate? Yeah, it's equilateral masturbation.
directly.
Equilibrate.
And they don't. We think they don't really tell us much.
EQ,
about
UIB, LIBATE.
I mean, a good example is financial services, which is really done off of asset prices, and that's how that inflation works. So the overall picture,
Use it in a
the story of
sentence.
why inflation should be coming down is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular
Up 700%. Would you take the PDT? You can just box it.
Impulses of any significance from the labor market.
You
So
can just sell
what's
the
story?
opposing
The story is
position
just where
and lock in your
unwinding from these
profits
large shocks
instead of
that
taking
economy
the
got in
PDT hit.
2021 and 22. in,
Especially
for
if it's your
example,
last
housing
one.
services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get.
Kirk, these
down to
TQQQ
2%.
puts have
It
a
might
month
take
left
another
on
year or
them,
two from
but
here.
are going to go in the money
I'm
after I
confident
open them
that's the path
today.
we're on, and
Is this
our
every day
policy
for you?
will
No,
do everything
but
it
it's
can to
some
assure
days.
that is the case.
More days than it's not.
Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings.
I'm going to hold them till they're
what
red,
has changed
as
about
is
the committee's
tradition.
assessment of the risks confronting the labor market? Is there just less concern now on that
I have
front,
3. Let me see what
or
I
is
can
it just
do.
about
I
there
never
being
sold
more
a spy
upside
call.
risk
Do you
to
understand
inflation
how it
that now
works?
needs to be accounted for?
I'll take
The
I could take a
unemployment
minute
rate
here.
is now the same as it was in July.
Can I-
4.2%.
well,
It's
I
moved
can't
up
really
and
show
down,
you.
but it's now the same as July.
Here.
And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So, but you're right though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think, you pointed out, participants in the FOMC really thought that the risks and uncertainty had improved.
All right,
relative to
so
the labor market, and it's because of it.
I'll show you
because
this picture.
Things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying.
Gray
Not that
pubes.
it's not
Pay attention.
welcome.
All right,
we don't
see
need
this?
it, we don't think.
So if you
had
were
a situation where
say you're short,
inflation's
you're
moving
long
around
the
by a tenth
60-50
every few
put
months,
earlier today.
That's
right?
You're
You're
against
You're up
the
like
fact that
you know
inflation has in
$60.
recent months been moving sideways in the 12-month window.
You can sell the 45,
and at this
and it
point,
will
for a
lock
while, they
in
were
not all
really
of your
focused-
profits, right? Because your
really
current
focused on inflation.
unrealized gain
Now
is like
got to a place
5,200.
where the
But it'll
risks
lock
of the
in
two we think are
pretty
broadly roughly
significant
in
amount of
balance.
them. And on SPY,
that's how
because
we
you have
do that.
individual ticks on the contract strikes, you can trim that even more.
And I'm just
Yeah, you take a
if the
$5 hit on
recalibration
SPX, but on
phase is
SPY
over,
you'd only take a $1
and what
hit.
You might call this new
So by
phase,
selling
and what are
those
the criteria
puts
for
against your
changing rates
long
is somehow
50,
different and
you
higher
lock
than it
in the
was before. Thanks.
profitability.
We're not.
Now remember on
we
SPY you're
remain
not
in phase,
cash settled though, so
yet.
you will
But
want
we may
to
get around to that, but
manage
I
that
would say
later.
we are,
But
though,
if it buys you time to get
in a new
out
phase in the process,
from under the
as I said.
PDT,
So,
that's how you should handle
And
it.
that's just because we've
generally.
reduced our policy rate by 100
How
basis
low
points.
can
We're
SPX
significantly
go
closer to
today?
neutral. We still think where we are is meaningfully restrictive.
We're running out of
And I
downside.
think from this point forward,
I mean,
it's
potentially we
appropriate
could get to
move
like
cautiously
59,
and look for
60,
progress on inflation.
maybe
We've,
50,
we've done a lot
but
to
it's
support economic
pretty
activity
unlikely.
by cutting
We'll
100
probably
basis points.
stabilize around here.
And, that's a good thing. I think I support the decision, and I think it was the right decision to make. I think.
Where's the
from
biggest
now,
pile of sold
we are in
puts?
a place where
6,000
the risks really are in balance, and we
by
need
a
to
long
see,
shot. But
progress
now
on
all that
inflation,
charm's
and
pushing against
that's how we're
price.
thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here.
Is
and I
avoiding the
think going
PDT
forward,
really
obviously,
all
we're
that
moving slow, which is
advantageous?
consistent
Well,
with,
PDT's
with the SEP.
PDT shuts down the account. If you get a PD, like an actual PDT violation, more than 3 trades over the rolling period, you can't use the account anymore until you deposit $25,000.
Kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard is to look, those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated.
Well, we've already
that,
exceeded my dot
to
plot
be
for
in
the week.
mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think, 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive.
There was nothing above 32
done,
on GME.
Neil.
Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course. That's part of what we do. But, you know, we really look carefully at is the performance of our goal.
Inflation's not going down based on any data.
Economy. So
there's currently no data that shows a decline in inflation.
We've seen inflation, well, over the last couple of years.
He's just
come down a
saying
lot.
bullshit.
We've seen the labor market cool off quite a bit. That suggests that our policy.
Like, they're talking about, like, inflation, instead of inflation going up like this, it's now going up like this.
Interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy.
Inflation has not done this at all in the last, in the last 3 years.
Conditions around, as you know, and we don't really control those. But I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value?
I just want the truth. You're looking at the wrong source.
So, you know, we're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for
you're
a law
good
change.
human,
That's the
Charlie
kind of thing
Brown.
for
I
Congress to
truly
consider, but
enjoy
we're
hearing you
not looking
educate and
for
help
a law
people.
change at the Fed.
Kumbaya, bruh. You heading out?
Andrew.
Oh, okay. Thanks. I don't know what it means
Happy
either.
holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple
Oh,
years
this
ago.
guy's trying to get the bounce.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous.
That's because they're not pumping trillions of dollars into their economy.
I feel
every quarter
very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment
Dixie isn't fucking around, not at all.
Quickly, the prime age employment rate has fell by about
straight up, like a little
0.5%
look at that.
rather recently.
Little rocket.
I guess is, do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so. No, I think overall, if you
nobody
look at
believes him
prime age
at all.
Participation is still very high.
Ooh, 10 years almost at 4.5.
The market is
Doric,
the hiring rate is
10 years at 4.490.
If you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers.
What's the shittiest bank?
For a job, though, the hiring rate is low, and that's a signal of.
I want them to go under this weekend.
Down. So we look for signs like that, and
no,
that's
it's not
clearly
Wells
a sign
Fargo.
of softening, further softening. I didn't mention it earlier.
It breached 4.5. It's got to stay above it.
An ongoing gradual softening in the labor market.
The Federal Reserve.
We need to see to get 2%
FLG.
And, you know, that's part of the reason that explains why we moved ahead today with the action, with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high. Wages are at a healthy and ever more sustainable level, wage growth. And so the labor market, this is a good labor market, and, you know, we want to keep it that way.
Thanks.
Amira.
Oh,
Thank
Jesus.
you, Amara Mokway from Bloomberg News. I just want to put a
Oh, they're
finer point on
fucked
the labor
anyway.
market. Can you keep the labor
Engage in the provision of multifamily loans on non-luxury rent-regulated buildings.
without further cuts? In other words, do you still view
Ouch.
the labor market as needing support to protect against a further cooling?
You know, we can't know that with any tremendous certainty. I will say that we think that our policy
FLG.
balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. You know, job creations are meaningfully positive. Wages
Oh, and they got a new
are,
CFO 4 days
still
ago?
a bit above
Perfect.
What would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's
Are you gonna
it's
short
one
it?
of our mandate goals, and you know, we
No.
pay close attention to it, and it's worth noting that it is still gradually cooling. Gradually.
I am
in
still
an
short
orderly way.
JPM though.
And you know, that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth. Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now
What's the
forecasting
purple
higher
line on the
inflation
chart?
next year.
I have no
High
idea.
Prices are still a burden for so many households right now. Why do you think it is that inflation
I think it was like the
is
old
proving
gamma
to be
neutral.
more stubborn than you'd expected?
You know, it breaks down into a long answer if you want, but it just has been.
I said
a little bit more
50,
stubborn.
60.
I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had to have had a deep recession and, you know, high unemployment by now. Well, that has not been the case. So, you know, the path down has actually been much better than many predicted. We've managed to have the
Oh,
unemployment
nice
rate remain
150 point down
essentially
day. I like
at
this shit.
its longer run natural rate, while inflation has come down from, you know, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down?
No problem,
One reason
Pubes.
is
Congrats,
that,
man.
Just a technical
You're still going to
issue
need to
around
manage
the way we
those though,
calculate housing
because
services.
you can't let them
And
expire in the
that process
well.
has been
You don't want them
slower
to expire
than
in the money.
Market rents are showing up more slowly in that measure than we
Really,
thought
you don't want it to
2
close
years
in
ago.
between
That's part
them.
of it.
I think it depends on your broker.
Other parts
Some
of the
will
story,
assign you,
but,
some will
you know,
just manage it for you on the back
what I
end.
think people are feeling right now is the effect of high prices, not high inflation. So we
It
understand.
might be
very
pretty
well
insulated
that
and just a
prices went up
servicer.
by a
It's
great
possible. I'd
deal,
have to look
and
into it.
People really feel that, and it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that. Burst
Where are
of
we
inflation that
closing?
was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices, and that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down.
We could
to its
close
target
right
and
around
keep it
here, I
there,
guess.
so that people are earning, you know, big real wage increases, so that their wages are going up, their compensation is going up faster than inflation year upon year upon year, and that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
There's not a lot of support here.
What do you see as the
They're not
biggest challenge
not
to the economy
particularly
under this
selling
administration?
selling a lot of
I feel
puts.
very good about where the economy is. Honestly, I'm very optimistic about the economy, and it's we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for doing the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What % do you see and the committee believes, where is that neutral rate?
So I'll say a couple things. First of all, when we write, the thing we write down in the summary of economic projections is the long.
All right, they're getting a little bit of support at 45 and 50.
At a time when
Larger support at 35.
balance and no shocks are hitting the economy.
Bounce back to the upside could, if they were able to get one in the next
That's not the question we're
hour,
asking.
it could go as high as 6,000.
Longer run numbers that we write down
But
and
it'll be
what
very
the
hard to do.
appropriate
Gamma's
policy should be.
super negative down
And
here.
So basically, at any given time, various shocks are hitting the
But
economy.
yeah,
And so
somewhere,
what we're doing
somewhere,
in times we're
probably
looking
somewhere
at
around here.
Our policy stance, and we're looking at the way it's hitting the economy, and particularly we look at the effects it's having.
There's
to
some
try to move the
70
economy
calls
toward
being bought, but
maximum
doesn't look
employment
like they're
price
having much of an
stability. And
effect.
the answer can be, there are things that affect the economy that are lasting.
But 45 and
permanent. the ones that are
35 both look
permanent
like
are the
pretty
ones that would be
solid
in our
supports.
star. The ones that could be lasting, but nonetheless.
So I don't think we can go any
over
lower than
time,
that.
they could actually affect
And
what-
then
what's
to the
sort of
upside,
technically
if we can
the
get
appropriate
above
neutral
60,
stance in near
we could
term.
get out to
So
like
we're looking at
75,
that,
and
we
then
don't know
maybe
exactly where it is,
maybe back
but
to
as I like to say,
6,000.
We know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many
So
estimates
I would
of where
look
that might be,
at,
and we know we're a lot closer to it, and I think we're in a good place. But I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more
So I
clarity
think
about a year out, 18 months out,
here-
as to where that goalpost, for lack of a
here
better term, is, because at the moment it looks
are pretty
vague.
important.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are
And then
empirical
support's
models, there are
probably right
theoretical
around
models, there are
there.
things that combine them, and they have as many different answers. as
So
you'd
the
like.
most likely
there's
closing
no
range is
real
here.
certainty. And I mean, it's actually a good thing to
But
know.
watch
You
for
don't
a
know exactly
reversal
what it
that
is.
breaks
So you're not
72.
tempted to think, oh, I think this model or this estimate is right. You just have to be open to the empirical data. That
So
are
about my
coming in and also how
LRCX
it's affecting
calls,
the
I
outlook.
cut
And it's
those.
not made any easier by the fact that that our policy works with long and variable lags. Nonetheless,
I wouldn't buy
that is the
puts
job
on
we
it.
have,
I don't think it.
and,
I think
so
it actually was
I think
pretty
we-
resilient to the
it's
sell-off,
appropriate
given
for
how
us now to
big the
proceed
sell-off is.
cautiously. Now that we're 100
So you're
basis
holding
points
your
closer
TQQQ
to
calls.
neutral,
They're
and,
puts, and
we'll do
not
so. Meanwhile,
necessarily.
the economy seems to be in good shape, and these cuts will certainly help to support economic activity and the labor market, while we can still
We'll
make
see.
progress on inflation because policy is still meaningfully
If we
restrictive.
don't get any kind of significant reversal today, then yeah, I'll hold them because we can go down a lot more.
Hi.
We're below delta neutral on the weekly, so we're now below weekly
Are you saying that progress on core PCE
DN and
counts as progress on
GN,
inflation, even if
and we're below
inflation
monthly
ticks up? And then also, since that's what's
GN.
projected in the SEP, I was wondering what accounts for that. Why do you all see core PCE going down and potentially headline inflation ticking up?
So,
Merry
and
Christmas.
as
I hope you
as
enjoy your
know,
gift. What is it?
The goal overall is headline inflation because that's what people experience. People don't experience core inflation, they experience inflation, and that includes food and energy costs. So that's the overall goal. But
It's a red
as we
Christmas.
know, headline inflation can
It's not bad. It's not a bad start.
and those prices can fluctuate for reasons that are not related to tightness in the economy.
I didn't know
and
what he was
therefore
talking
are not
about.
Really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So that's it's complicated, but ultimately
It's not.
our goal is headline, not core. So your second question was what?
Why do you all see core going down but headline potentially ticking up?
So headline can be affected, you're talking about next year.
Mm-hmm.
Yeah, so headline it can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year, but that's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy
So
prices?
we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks haven't really nothing has come out of those risks that really has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, and but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of supply conditions.
Finally admitting inflation is only coming down because of energy.
Feeling really the effects of geopolitical turmoil. But we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Kelly.
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of
pickles
course.
requires a lot of theta to bleed off. It's such a fast drop on the front end. Is the position designed to close the sold calls and catch a bounce of the deep in the money calls?
How worried are you?
No,
Congress in closing
but you
that
can close the sold calls and try to catch a bounce.
Again, we don't.
That's one way of managing the
a
exit.
couple of months of higher readings or a couple of months of lower readings, and what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation, and it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation.
IWM looks like shit.
That's exactly the kind of economy we have now. And we just want to
It's down like 3% today.
This will probably take some years, but that's
higher
what's
rates
going
for
on
longer
right now.
is terrible
And,
news for
I don't
small
think that,
caps.
a couple of months of higher
Guess who has
inflation
2
will
thumbs
signal,
and sold his 60-50 put early?
anything of the
You?
nature you're suggesting.
And just one follow-up. Let's look more long-term.
I'm gonna have to move in with
predicted
you,
hitting the
Nick, and just
2%
manage
inflation
your
target
shit.
in 2026. It's now
It's
been pushed
okay.
out to 2027.
I'll get
You
packed.
said you're focused on enabling further progress on inflation. That's not necessarily progress in the right
Carl,
direction.
we know who you are.
Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out.
Wow,
you're talking
she's
about high
caked up.
uncertainty, Very
Who?
high uncertainty.
I didn't see her.
We really, at that point, it's not possible.
I was talking to the lady on the
predict where
screen.
economy's gonna go
Oh.
in 3 years. So what we're doing is we're looking at what's happening now. We're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down. Goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and
Are
those pieces come
TQQQ puts and
together. There's
MS
every
puts
reason
right
to think
before
that they will.
FOMC,
The timing
meaning
of
to
it is
be
highly
responsible?
uncertain. But you're not
Fuck my
wrong
life.
that-
The puts are for
we've-
Jan.
It's been a bit frustrating because
I know they're
we
about to
made
go in the
progress.
money.
It has been slower
That's why I
than we
picked
had
that
hoped.
price.
Nonetheless, we're still on track, and I think if 2 years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Go to Nancy for the last question.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways. Appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be, we are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So, thank you very much.
All right. Well, he finally stopped saying bearish shit, so we got a little bit of a bounce. Looks like we tested that 45 low. There is some support there. It's not very meaningful, but it does exist. Today seems like a good day to keep an eye out for MOC reports. Yeah, we can take a look when it comes up. Should have gone on Carvana short. It's doing okay. What expiry are those big sold puts at? Puts for 6,000 at. Give me a second. I will tell you. Most of them are out on 12/31, so end of this month. Do you think they try to V it? Well, they're going to need to sell a lot of puts to do that. It's not been going well for them right now. We're already heading to the lower support, which is not great for the bulls. Down to like maybe 35 here. Bot puts coming in at 59.20. This could just keep slipping, to be perfectly frank. TQQQ put in the money. Nice. ESPN SC. Welcome aboard, man. Hit me up on the Discord. I'll get you added to the country club after the stream, dude.
Happy birthday, Gherk. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we holding the float. If you are what you eat, that makes Gherkin the GOAT. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies, while I'm selling CCs like another fucking moon win. Praise be to RC and the VY, please, cause I need G and me to moon soon, man. Got the van GG on the CNBC, saying that he ain't seeing no collusion. Yeah, we might be apes, but
no, that's kind of loud, huh? You'll be alright. Louder for the homies in the back? Can you be perfectly Gherk instead? I already am. Thoughts on Nike? I don't really like any consumer stuff right now. Can you look at the SPY daily candle? Earlier you said if we played FOMC we'd lose money. Well, I didn't. I missed out on puts cashing in, but wait, then I got puts after bearish confirmation and made money without the gamble. Brilliant. Who knew? Oh yeah, you did. Thank you. I bought puts yesterday. What the fuck are you talking about? But yes, it's better to confirm. And there was plenty of time, right? You didn't need to gamble on the overpriced options. And I think that's ultimately a much better outcome. Do you think bulls bounce this overnight? No, I don't think the overnight move is a major concern. We don't have any data tomorrow, right? Oh, you know what there is tonight is Japan. So Japan presents some risk. That's gonna be something you're gonna have to take into consideration. I forgot about that for a minute. I don't think Japan's going to do anything, and I don't think the market's pricing in Japan doing anything. So I don't think that the reaction to Japan doing nothing is going to be significant in any way, because the carry trade's already levered to the tits. But yeah, I really don't. If they did do something, that would just be more bearish. We have GDP tomorrow, but I don't think anything there is going to be outside of expectations. Could bulls use it to turn shit around? Maybe a little bit. Maybe like a slow grind back up to gamma neutral. That wouldn't surprise me. What's more likely, Godzilla attacking or Japan doing something? God damn it. I hate you guys sometimes. Tenure 4.5%? Woo! Let's fucking go. I don't want to wait around for bank failures. I just want them to start failing right away. I don't know about Godzilla, but I'm pretty big in Japan. Is that a height joke? Nice. Or a penis joke. Both? Excellent. Quick, what's crypto doing? Also tanking. That's how it works. What's the overnight play? I don't know. Oh, I'm up 120% on these puts already. Hmm. Carvana's not in the SPX. I mean, if you're worried about an overnight reversal, just hedge out of the money. Or take profit. Stop being a greedy fuck. Damn. This shit's just dumping. Dumps like a truck. Ooh. TQQQ failed its upside trend. Ignore the alpha at the bottom. Hmm. You guys remember just a couple months ago when we were long TQQ back here? Oh, how the turntables. Well, get good, G-Wagon. We're gonna lose 5,900 too, aren't we? Maybe. I love this. We lost the 50 MA already. Next stop, 58.78. What a great day. More of these. $58.78 was the October high. I made 20 on the weeklies at 57.76. But the most important downside target on the technical side, 56.96. That's where the monthly is in a reversal. Vega puts up 50% now. Yeah, they're moving. It's not stopping. Nope, it's just selling off harder. It's not crashing. But it is having quite the down day. One second. NQ might be crashing. Well, tech was the only thing that hadn't sold off, right? All the breadth had already sold off over the last week at the top. So that last like 20% of the S&P that was still above its 20-day average was just tech stocks. Yeah, Dow's been getting slammed pretty hard. Another day of good action or a totally flat one. I think the expectation after big moves like this, I mean, based on what we've learned about how options markets reposition after really large moves, is to expect realized vol to crush to some degree. That can result in reversals, but it doesn't always. I would have some kind of hedge into the overnight session though, because the Bank of Japan decision is still technically an unknown. Dole is less than $14 now. I'll buy it if it gets back to 10. I'll buy more. Is this the Fed put? That's the Fed put getting pulled. This kind of drop does breed fear. Yeah, no shit. MNQ's down 800 points. There's an entire repricing of the market. Yep. A's, welcome to Billionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added to the country club after the stream, dude. Appreciate it. It's a good thing I moved those old people's money to cash last week. You're gonna be their hero. Remember this morning when the bulls were irritating me? My biggest sadness from this year is that when QQQ broke 505, I sold all the QQQ I bought in the August dip. Because I was like, this is ridiculous. I don't know. It'll really depend on like what vol does in the overnight. But I would say that bulls try to build some stability around here. These are pretty important levels to not lose. We got 14 minutes left of the day today. I don't think they have any substantial positioning, and I don't think anyone's probably willing to sell more vol here, just because the risk is insane. And their margins are probably already fucked due to all the sold puts that they had go in the money today already. So it's very likely we close at whatever bottom we end up at, like near to it. Now, tomorrow, overnight session, Japan can help lift things a little, but I think we're pretty well below the CTA trigger here. And if CTAs start selling off, they're going to continue to sell off as their standard deviation triggers hit to the downside. And they don't dump all at once generally, but they can. Usually it's more a range of prices than one specific price, and then you know you find the average of that range from their buy-ins to where they would sell off. And that's usually what you get out of like the Goldman Sachs or the Bank of America like CTA models. But if CTAs continue to sell off into tomorrow and we stay below those triggers, it's likely they'll keep selling off and we could keep going down more. Nvidia green on the day, still holding up. It had a big gap up this morning. They've got like some upcoming news and shit. Barely green on the day. That's still what, a 4% drop from its high, and it's still not in a good position on its options chain. The bond market's the real story today. Yeah, the bear steepening is getting real fucking steep. Do you think the pullback on Tesla will recover? There's support on Tesla. There was support on Tesla at 50. I'll have to look tonight and see if it broke down. But up until the Fed decision, everything on the Tesla options chain was just gunning for 500. It's pulled back to 440 here. Yeah, that's not great. I mean, it's technically just a little bit below Gamma Max right now, but it's gonna lose a ton of momentum from that pullback. And so it's possible that it could continue down. 440 is a major, like, a minor support at these levels, but positioning is going to have moved a lot on Tesla today, so I'm gonna have to see what it looks like tomorrow. Yeah, the move is wild. It is. See, this is what I've been telling you. Well, I'll cover it in the end of the day, but the correlation thing did what we expected. Also, something really... Well, I'll cover that too. Never mind. We'll talk about all this shit after close. Man, there were no fucking tail risk hedges today at all. Brutal. Skew almost hit an all-time high again yesterday. The fucking people are insane. Fed fund futures are still pricing out the rest of the rate cuts into June. Bingo, bango, bungo. Welcome to Billionaire Man. Thank you so much. Hit me up on the Discord. I'll get you added to the country club after the stream, dude. Isn't this setup Friday OPEX to be really bearish? Yeah. Well, we've lost a lot of the charm, like the supportive charm. We've fallen through a shitload of those, like, in-the-money calls that were propping up price. I'll need to see how many, but we've definitely lost a lot of the supportive charm. Yeah, strangles don't seem too bad here. I mean, worst case, a little bleed. I'd probably get extra theta on them, though. Outsized move like this affect SLD differently into next week. I mean, sometimes you can get all of that liquidity deposit realized at once, and I would say Like an almost 3% down day and a more than 3% down day on NQ would be enough to like get everyone to sell off for SLD simultaneously. So I mean, I would assume from this point forward that SLD is pretty much a wrap. I doubt there's anybody like waiting to make deposits at this point. Or that needs to sell more things to make their deposits. They could. I mean, it could keep going, but it's more likely that everyone's out. God, I love it when you tell me to do the thing I already did, which surprisingly is the exact opposite reaction I have when my wife does that. Pickle Man, what happened? Bear time. Powell said, fuck your calls. You think someone blows up on this move? Probably not someone significant, but someone could. A lot of money was lost today, I can tell you that much. The 10-3 month is almost about to pass the 10-2. Our Theta gang in shambles? Oh, Jesus. I can't wait to go over there tonight. It's because he got the printer liquidated in the margin call. JP out here saving my GME cover calls. I sold 100 naked 450 puts on Microsoft. How fucked am I? I mean, I'm a little close to some of my sold puts here. I'm not like in danger or anything. I have hedges, but it's getting kind of close to where I had some sold puts. God, I love to see 2 months of price action just fucking wiped out in a single session. Your eye is getting close to my personal demand zone. Meanwhile, Govy up 3.5%. Fortress. I wish they'd get their delisting notice already. Capital One finalizing their deal to buy out Discover in the next few weeks. Time to chop up my Discover card. It's still one session. I know it's been 2 hours, but why did we move from 59.50 to 58.70? Because there's no support. And they tried to sell puts at 6,000, and they tried to sell puts again at 59.60.50. They just got blown up on both of them. What does this do to the housing market? Nothing. The housing market doesn't move this fast. Popcorn demand zones for stocks. Bearish Ally financial trade with a bearish BX trade. I'm already short BlackRock, Blackstone, and JPM. I'm like long-term short. So, I don't know. I guess I could short Ally too. It seems like overexposure though. Stop bragging about buying the mid, dork. I was told that Mexico was going to pay for this. Yes. You're a mid. I'm sorry, Gherkin. I didn't mean it. Alright. I'm still hurt, but I forgive you. Have you thought about shorting insurance companies? Yes. I like rates to move higher, though, first. And then I'll just short the biggest insurance company. And hopefully Buffett will die while I'm shorting him. Build-A-Bear is the bedrock of the U.S. economy. See, this is how I know you're not gaff. Turd. Would you change your name back to your actual name? Oh, look at that. My TQQQ puts can go even further in the money. This is fantastic. You know this isn't a crash, but it sure looks like a crash. When have you ever been in a crash? This is barely a healthy correction. What about your long QQQ indicator? Did it reverse yet? It told me to go short TQQQ yesterday. That's why I went short TQQQ. See? Yesterday I was all like, I'm gonna touch the line. And then I just plowed right through it. See how that works? Maybe it just gives a little tippy tap. No problem, Maeve. Yay, now you're rich too. Awesome. The meatball did, in fact, predict this. Just maybe not in the way you would have expected. See popcorn? Money, money, money. Thanks, Kirk. No problem, Fluffy Cod. Whoa, that's such a cool website. Should I talk about it? It's almost like you could have expected what happened. I know. Is our intraday data broken? What a great ad. Days like this are super awesome. Thanks for reals. No problem, Danny. Let me buy it. Your poor excuse for a salesman. It's not intraday anymore? What is it? Oh, it's because the market's closed. Smart. QQQ is still dumping. Perfect. All right. Damn, that's fucking brutal. I lost another 70 points in after hours. Well, as you can see, we exceeded the market maker's expected move by, you know, just a couple 100 basis points. This brings us down to the like near the bottom of my expected bearish range. There should be some support around 58.50 or so. We might see bulls build more support around that level going into tomorrow. For ES, we've broken through the bear signal to the downside at 59.48. Now there's a couple supports in here. The next one to the downside at 58.93. The one here at spot 59.23. So possibly find a little bit of support here below the bear signal. Maybe retest it tomorrow. And that would give us a better confirmation of a continuation. Retest and fail. So I'd be on the lookout for that. Dollar obviously just absolutely fucking ripped today, up 100 points. Top end of the yield curve moving up very strongly as well, with the 10-year ending the day at 4.51, the first level of significant risk for banks with hold-to-maturity securities that are underwater. The 20-year at 4.763, and the 30-year at 4.657. Commodities pretty flat, actually, surprisingly. Oil was up above 70 a little bit earlier today, fell back below. Gold slipping with the rise in the dollar, as is silver and copper. Rest of the precious metals not doing too well either. Agriculture, materials, not too much of a change. Correlation broke out. We got that correlated move between core 1 month and 3 month today, and we see, you know, correlation on the 1 month surge ahead of the 3 month, which is kind of what we talked about last night. And you know, as those become more highly correlated and they continue moving up, we can expect to see dispersion between indexes and their underlyings break down, which means higher vol. Downside on SPX, NQ, etc. Now, interestingly, despite all of this negative price action, leverage in the carry trade has risen, and it is rising pretty rapidly into the Bank of Japan decision tonight, where they are expected. Now, this is weird. It seems that the consensus by the people leveraging up the carry is that the Bank of Japan will not do anything, right? But as far as the swap market's concerned, there's still about an 87% chance that the bank raises tonight. And if they do raise rates tonight, everybody who's massively over leveraged in this carry right now is going to be put in a very similar situation to the one they were put in August, when leverage was actually lower going into the bank's decision. So if Bank of Japan were to raise rates tonight, and I wouldn't really say it's a surprise given that it's being priced in by the swap market, but it would be a surprise to everybody who's over levered in this trade. That could really fuck shit up. I mean, you're talking about a rapid collapse in the currency spread and a probably very significant drop in the dollar immediately after it breaks out, right? And so, that would upset all of the pricing that has been readjusted with today's FOMC announcement. Not to mention, absolutely destroy marginable securities. So, really, really, really important decision. 10 p.m. Eastern time. Also, something else to note, and this is very rare, the forward yield on volatility has closed at positive 37.27%. Usually, that does not close positive. And not only did it close positive, but it closed well above the forward yield for bonds, which means that the desire to hedge the forward yield on volatility from bond portfolio holders is going to be very, very high. Jesus Christ, Vega Puts, I love you. Core 1 month or 3 month rising really, really rapidly. We don't have a print from Move yet, but I'm going to tell you that Move is also going to move back up very significantly today, probably back over 100. Rename Meatball to Lightning Picks. Okay, sure. How about we call them Thor's Little Hammer? TLH. Thunder Prawns. That's even better. Fuck yes. Skew neared its all-time high again yesterday, showing that, bulls were wildly unprepared for today's price action, and there was very little tail risk hedging on the index. Not a lot of bot puts, basically. All the puts on the index were sold, and we pretty much plummeted straight through the majority of them. That's really important going into OPEX this Friday, because a lot of our support and what was keeping prices propped up, despite the fact that 20% of the S&P, now even more of the S&P is going to be under its 20-day moving average after today. This will update in about 5 minutes. But the last vestiges holding the market up were massive charm flows from in the money call positions that had been squeezed out, and also tech. Now both of those are now, the market sold off. Those in the money calls are no longer providing supportive charm. Quite the opposite, actually, and. Now tech has also been selling off. Safe to say we got rejected off the 1929 trend line. I mean, yeah, we were within a few dollars of it. I don't like it that it missed, but I feel like the line I drew was pretty accurate. But yeah, I mean, we tested it and failed it, so one could say that. And we did finally get our big spike on vol, which came alongside a little bit of drop in correlation between VIX and cash VIX. However, that build up proved out, right? That improved correlation that we'd been watching over the last couple of weeks did finally see some realization today with a much bigger move in volatility. So always something really good to pay attention to, those correlation metrics there. And Fed funds futures rapidly pricing out the rest of the rate cuts for 2025. Earlier going into today, it was sitting at about 1 rate cut by June of 2025. That's now down to 1.7. If we see inflation expectations increase now, that will be bearish. It will no longer be bullish. Okay, so we've had about a year and a half where rising inflation expectations meant expanding margins, and now Fed fund futures have kind of flipped the other way, and rising inflation expectations will mean tighter financial conditions and higher for longer rates. Okay, so we're kind of back to that late 2022 environment, not the mid 2023, early 2024 environment. And that's going to be something that's really important when assessing the macro data as it continues to come in. And then lastly, the 10 2-year spread at positive, looks like positive 15.5%. Hasn't really gotten super crazy yet, but if we go back like a very long time ago, we can see, there were some periods right around the COVID crash, around 2008, around the dot-com bubble, where we did see the 10 2-year spread turn even more positive than it currently is. We're not there yet. I would say that we probably need to break out about 23.5% before that starts to become really detrimental to credit markets. We're gonna RRP on train more rapidly. Well, they cut the on RRP by 30 points. Did you see that? I think we're gonna start to see. We're gonna start to see the last vestiges of liquidity drain now. So not just RRP, right? But so we got about 3.21 trillion. This has been draining pretty steadily from 3.6 trillion in March. I think we're going to start to see that come down pretty rapidly. Like we did in 2022, where the reserves got hit. VIX top 28. This seems to be the nail in the coffin that has existed since. Well, yeah. I mean, this is the Fed giving up their hold on protecting the banks. Fidelity, thanks for selling my bajillion XD0 GT puts before it bajillion X'd. Oh no. My bank's been really pushing me to open a savings account. Banker was downright harassing me, and I wasn't interested. Huh. I don't know, that could just be like commission-based. I'm sure there's an incentive for the commission, but... Gherkin, I didn't trade today. It's okay, there's always tomorrow. Alright, well, that's about it. We'll see where this carries out into the end of the week. Thank you guys so much for tuning in. I hope everyone did pretty well today. I think it was a pretty easy trade to the downside. So, catch you all later. Have a great night, guys.